Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/rive to receive the top 10 stocks to buy right now. For years, Amazon has been able to do almost nothing wrong in the market's eyes, but that ended Thursday when the company reported third quarter 2022 earnings. The stock fell over 20% in after-hours trading, and there's not really a lot to like about this quarter. There are a lot of takes about it out there, but I want to focus on something that almost nobody is talking about so far, and that's the balance sheet. Amazon has benefited from something called the negative cash conversion cycle for a really long time, and that really changed in the third quarter. So let's get into exactly what this means for the company, its balance sheet, and investors. Now, you may be asking yourself, what is the negative cash conversion cycle? Well, it's simply cash just for growing that some businesses get. When a retailer like Amazon or a grocery store buys goods from their suppliers, they don't pay them cash immediately. They use what's called accounts payable. So they may pay them in 30 days or 60 days or sometimes even 90 days. But when a customer comes in and pays at a grocery store or if you're buying something on Amazon, you pay for that immediately. So these companies get to keep the cash that you pay them immediately until they have to pay those suppliers. If revenue grows over time, cash on the balance sheet actually grows just for simply growing the business. You don't even have to sell your goods profitably. You get more cash just for growing revenue. This is one of the reasons that grocery stores can operate at really, really low margins because it's basically cash flow positive the second they open the door. Now, Amazon has been benefiting from this for decades at this point, and when they were growing 20, 30, even 40% per year, the amount of cash that they could bring in just from this negative cash conversion cycle would amount to billions of dollars. The problem is when growth slows, that cycle reverses, and then sales basically eat cash. And we saw this starting in the third quarter. Now, this isn't a complete reversal of the negative cash conversion cycle because Amazon is still growing, but we did see some concerning trends on the balance sheet, so I want to get into those. Here's a table that shows exactly what the numbers have looked like over the last 12 months. Now, in red here, I have exactly what the change in cash is just from this single item on the balance sheet. So accounts receivable went up $7.6 billion. This means that customers owe Amazon $7.6 billion more than they did a year ago. That's cash that effectively comes right out of the balance sheet. Accounts payable were actually down $3.7 billion. That means that Amazon has paid its suppliers $3.7 billion more than it had a year ago. Inventory on the balance sheet is up $5.7 billion. Now, this is something that I highlighted before earnings started. I will link to that video in the show notes and on the video here. But inventory is, I think, something that's going to be really important for companies across the board this earnings season. So the fact that Amazon's inventory is up is not really a great sign. So how do you pay for all of these big changes on the balance sheet? Well, there are two options. You take out debt, which is something that Amazon did, added $8.8 billion in debt over the last year. Or you take cash off the balance sheet. Cash and marketable securities were down $20.3 billion. In total, Amazon's free cash flow was actually a negative $19.7 billion over the last year. Now, we normally value companies based on the amount of cash flow that they can generate. So the fact that Amazon is generating a negative $19.7 billion in cash flow is really concerning, and it's a really big number. Now, is this a reason to run out and sell your shares right now or really panic about the company? I don't think that's the case, but this is a concerning trend for Amazon and definitely something that investors are going to want to keep an eye on. I think this just highlights the kind of challenges that they're going through coming out of the pandemic. If you remember, during the pandemic, Amazon was one of the companies that really benefited. It grew faster than it knew how to handle. It began building fulfillment centers and hiring people at a really rapid rate. And when growth slowed over the last couple of quarters, they just simply weren't ready for that. And that's why I think we're seeing some of these challenges on the balance sheet and also the income statement. So Amazon is going to adjust to this the same way that Shopify did when they adjusted their expectations for future growth over the last couple of quarters. They basically said, hey, the pandemic was this one-time thing. We don't expect it to be a step change in the adoption of online retail. We're seeing the exact same trends at Amazon, and that's the growing pains that we're going through right now. There are some fundamental concerns. I would worry that margins are going to be squeezed over time as the e-commerce business gets more competitive. Amazon has also done a lot to wring as much out of its customers and suppliers as it can with ads and things like that expand margin, but also put pressure on their suppliers. And AWS just simply isn't growing as quickly as some of the competitors. So Amazon isn't in as good a position as it once was, but it's still a really big, really powerful company. What I think is harder to answer right now is, how do you value a company like this? How do you value a company that has negative $20 billion in cash flow over the last year? I simply don't have an answer for that at this point. So this isn't a stock that I would buy, but keep an eye on these balance sheet trends, because I think once you see these turn around, that's when we'll start to see the stock turn around. I wouldn't be surprised if this is not the low. Amazon is still a very expensive stock. It could go significantly lower, especially if these balance sheet challenges persist. But I hope understanding this negative cash conversion cycle and the impact on the balance sheet is helpful for you as an investor. What are your thoughts on Amazon in this quarter? I would love to hear in the comments section below. If you enjoyed this video, give it a like. If you're interested in hearing my thoughts on inventory challenges to watch for, click on that video here, and also subscribe to the Rive Project. I'll be covering a lot more earnings this season and a lot of really interesting companies across the market. Thanks for watching, and I will see you again next time.